So if 5 years is 40, what would a 20-year CDS equivalent? They don't trade at 20 years, but let's put out a 20-year number. 20 times 8 per year gives you 160 basis points. Now, the total funded and unfunded liabilities of the United States of America is approaching 200 trillion US dollars. You take 160 times 200 trillion, and you get, I'm doing it in my head, $3.2 trillion would be the implied insurance value on the United States. $3.2 trillion just on the United States. What is Bitcoin trading for?
Greg Foss, a well-known Bitcoin strategist and executive director at Validus Power Corporation, is of the opinion that sovereign credit default swaps can be used to determine the inherent value of the most valuable cryptocurrency asset. According to Foss, the evidence that Bitcoin is incredibly undervalued at its current price comes from years of experience managing risk and an analysis of the creditworthiness of the United States. Over the years, Foss has revealed his belief that Bitcoin is the best asymmetric asset he has ever seen, calling it the best asymmetric asset he has ever seen after more than 35 years of trading the markets. Foss believes that a basket of fiat currencies and sovereign debt would fail if the cryptocurrency were to rise in value. He wrote an article for the Bitcoin magazine in October 2021 in which he claimed that Bitcoin was insurance against the sovereign nations, issuing fiat money's declining credit rating. Foss thinks it is possible to determine the value of crypto assets just by looking at how creditworthy certain nations are. Using the United States as an example, Foss pointed out that a CDS contract with a 20-year period at a rate of 100 base points would be worth $1.9 trillion, but that was back when the nation's debt was around $190 trillion. Currently, Medicare, Medicaid, and Social Security are responsible for more than 170 unfunded future obligations, bringing the total liabilities of the United States to over $200 trillion. Of this amount, about $32 trillion are funded debts that are visible on the balance sheet. The same 20-year term CD deal has reportedly increased from $1.9 trillion to $3.2 trillion, according to Foss. That's only for the United States. So it's clear how inexpensive the crypto asset is when compared to the current total market cap for Bitcoin, which is $563 billion. Though it's still a very controversial proposal, one may consider Bitcoin to be the insurance for credit default swaps in the US and other nations. The leading cryptocurrency asset, according to Foss, is the anti-fonzi scheme par excellence. Though he thinks it would be when all fiat currencies, including the US dollar, eventually fell to zero, the concept may not be taking off right now. Greg adds that Bitcoin is considerably superior to other assets, including gold, and it has no counterparty risk to cap it all off. Please consider giving this video a thumbs up, subscribing to the channel, and turning on post alerts for more content such as this before we listen to Foss's in-depth and incisive analysis of Bitcoin's inherent value.
So having been a credit CDS trader and a distressed debt trader my whole life, what is a credit default swap? It's basically an insurance policy on the default of any counterparty. It started, and in my case, it was on not distressed debt, but junk debt or lower quality debt. But it goes all the way up the credit quality spectrum, all the way to sovereign debt, which is typically the highest rated credits within any country. So, the S&P and Moody's will have a cap on the ability of a company to be rated higher than the sovereigns. Then one day there was a time when the drug companies in the US were rated higher than the credit quality of the USA. But at the end of the day, understand what happens. You have various tranches of credit risk as measured by the credit rating agencies, subjective credit rating agencies. Here's the truth. If the USA could not print money to solve their debt burden, they'd be the equivalent of a CCC rated corporation, because the USA does not even cover its interest expense one turn from its EBITDA, if you will, or free cash flow. Why? Because the USA has entitlement spending and it has military spending, and the residual is not enough to pay for the interest expense. So the USA is a zombie borrower, but it can print money. if people embrace the thesis that Bitcoin could be viewed as credit default swap insurance on USA and all other countries, well, it's trading about 1/7 of its value just for the USA. And here's the really cool thing. There's no counterparty risk. Bitcoin is not an insurance company. When you hold it in self-custody, you don't have to worry about buying this insurance from an insurance company like Bear Stearns. See, when I was trading credit default swaps, I had an exposure to Bear Stearns that meant I thought I was going to have insurance from Bear Stearns. And guess what? When Bear Stearns looked like it was going to fail, I had to run out and buy insurance on my insurance company. You see how this whole circular thing works? Bitcoin is so beautiful because there's no counterparty. So there's a way to value it, and there's a way to appreciate that it has no counterparty risk. And then you could say to me, well, Greg, isn't the same thing said about gold? And I'd go, yes and no, because gold has no fixed supply. It's not transferable or portable like Bitcoin is. And most importantly, it's not auditable. There is no blockchain to audit it. And I still like gold, don't get me wrong. But at the end of the day, Bitcoin is so superior as not only a technology, but also as an auditable asset. That is why I love Bitcoin, as effectively, in my view, from a credit trader's perspective, my whole life, it is the most beautiful insurance policy on the failure of fiats globally. If the thesis is leaking out, it will, be spread by bigger money risk managers who tend to look at it from a credit lens. And I will tell you, another guy that I have enormous respect for at Golden Tree, Tannenbaum, Steve Tannenbaum, he loves Bitcoin for a similar reason. And all I'll tell you is it resonates with the credit guys more quickly than it resonates with, firstly, equity guys who, in my view, are not always the sharpest tools in the shed. And then the run-of-the-mill, mom and pop. It takes a long time to permeate the entire spectrum, Michelle. So yes, everything has subjective value, but I'll just tell you, for guys that have spent their life in credit, man, it's like the penny drops right away. They're like, oh my God, this is exactly the hedge I've been looking for my whole life. Everybody can use different ways of valuing it. Other people can value it based on a technology. Other people can value it based on an information transfer protocol. So technology stock guys who I know have bought Bitcoin in Canada, they think of it as a technology, not as an insurance product. And then credit guys think of it as an insurance product. And you may think of it as totally something else. Store of value, store of wealth. All of this is what determines an open market price on Bitcoin. And that's the beauty of unmanipulated market, okay? Bitcoin is unmanipulated. The fiat Ponzi is manipulated by guys like Jerome Powell, who gets up there and tries to manipulate your cost of funds using antiquated technology and rear view mirror driving, okay? This is the problem with capitalism today. Bitcoin is a free and open market. It's a thing of beauty, and it means different things to different people, and it can get valued in a whole lot of different ways. Ultimately, it settles on a market price that is not manipulated. It's beautiful. Yeah, let's not go too far, but just imagine the idea that I laid out with the USA. Take that for the USA, add in all the G7
G20.
Nations.
Okay.
Yeah, go all the way down to the G20. You'll come up with a number that's over $700,000 US per Bitcoin. Using credit default swaps. Hey, it's trading under 30,000. It's trading at let's do the math. It's trading at 1/27th of its intrinsic value according to, I say the word intrinsic, you don't agree with me, I don't care. It's still 1/30th or 1/27th of the value that you could put on top of Bitcoin as a valuation metric. I don't sweat it. It's so stupid cheap. Don't overthink things. I could even give you a higher target price based on a share of total addressable market. I don't want to go there. I'm just going to say, if you own 0 Bitcoin, you're a fool. It is the best asymmetric investment opportunity I've ever seen in 35 years of managing risk. And we're listening to guys like Taleb and Charlie Munger, who are conflicted fiat Ponzi fools who are trying to say it has zero intrinsic value. I'll take the other side. Thank you, sir. Because I think it could go many times higher. Thank you.
How do you feel about Greg Foss's overview of Bitcoin and the various ways it might be valued? During his lifetime, the well-known investor wants to see energy costs expressed in Bitcoin. Considerably soon, do you believe that will occur? Please share your thoughts and views in the space below. Don't forget to hit the like and subscribe buttons, as well as some of the market's most brilliant minds in our other films. Thank you so much for watching. I'll see you in the next one.